Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Justin Nielsen here with a look at the action in today's session. And Justin, it seems like it's a little bit of the quiet before the storm this week.
Yeah, so it was a little bit of a mixed market. We'll take a look at a few breakout attempts with McKesson and Worldwide Wrestling Entertainment. And then also we'll take a look at energy because that was one of the big movers. So we'll take a look at Exxon Mobil and a few other of the energy stocks today.
All right, we'll do that. But first, let's take a look at the major indexes. So the NASDAQ today down about 0.4% on the upside. The strongest we had the Russell 2000 up 0.4%, followed by the Dow up 0.3%. The S&P 500 lagging up slightly, up by about 0.1% here. So just so you can see, we did hit a little bit of a resistance around that 12,000 level. But what do you make of where we're at right now in this market? We do have a lot of potentially market moving headlines throughout the week, which we'll break all that down. We'll provide a little bullet point list of what everyone can expect this week.
Yeah, exactly. Get your calendar out, right? But this isn't unexpected. I mean, that was a very strong move that we had in a short period of time. We got above the 50-day moving average line, which was great. We're holding above some areas of resistance that we got above, and now we're holding above those. But that 12,000 is a little persistent, and even if we got above that, we were kind of noting, hey, there's the 12,320, there's 13,000, and so on. So there's a lot of resistance that we do have to overcome. So a little bit of a break here isn't out of the ordinary, but you almost have to have these two thoughts and scenarios in your head. Look, we could be in a scenario here where this pullback gets a little bit more serious. And again, we'll kind of see once the news comes out this week if we might be heading more in that direction. Or, if you kind of looked at this declining tops of a trend line that we've got, we could potentially break above that. We've already broken above the 50-day, but we could break this overall downtrend. And, that would be very positive and say, hey, maybe the market's looking forward enough to say that, the Fed tightening will come to an end at some point, and the recession, if that hits, will come to an end at some point. Maybe the soft landing is being baked in, but there is a lot of uncertainty right now, so you kind of have to go with what the market is telling you, as opposed to necessarily coming up with a strong thesis of this is what I think is going to happen, and then ignoring all evidence that comes out to the contrary.
Exactly. Yeah. Good to go through all those different scenarios so we can be ready, because this is a big week. Not only do we want to be ready for that broad market reaction, but how we then position our portfolios accordingly. So I guess that's another question, Justin. Underneath the surface, what has it been looking like? Has there been plenty of setups that we're seeing, or is it kind of slim pickings still?
Yeah, it really has been a lot of slim pickings. And, what's even worse is I feel like there's been a lot of this rotation happening.
Yeah.
As soon as something starts looking like it's gaining some traction, boom, it immediately turns. We saw that with some of the discounters. Dollar Tree had, you were talking about that on Friday with Ed, kind of had a pretty big shakeout, and, it recovered. Ollie's today, that kind of took a little bit of a downturn, recovered off its lows, but that was a break of below the 21-day line. So and this isn't something that is just regulated to this group. We saw that with Li Auto. We've seen it in a number of places, and I mean, to a dramatic degree, we saw that with Sierra Wireless today, SWIR. That was a big break of the 50-day moving average line. And again, this was something that was getting traction, making a profit of 20 to 25% from its breakout, and then in a single day, nearly wiping out all of those gains.
Yeah. Exactly. Okay, so thanks for that. Look, let's also take a look at the S&P 500, Dow, and Russell here. So just hovering right under that 4,000 level. But as you said, with the sizable gains that we've seen in the last number of sessions prior to this week, good to see a pause here. There's a lot of stocks that are maybe carving the right sides of bases, retaking their 50-day lines, and now at this point, it would be good to see a little bit of a pause. Will the market deal us that hand later this week? I guess we'll have to find out.
Yeah, but again, at least you see that even the S&P 500's activity has really kind of maintained itself pretty much in the range that was traded on Thursday. So we could be in a trading range for a little bit, and then you'll kind of have an upside and a downside. Okay, do we break above that area, break above that resistance at 4,000, or do we kind of go the other way? And again, that remains to be seen. But also worth mentioning is IWM, which is the Russell 2000 iShares ETF, and this one has been holding up pretty well too, and was one of the few bright spots. It was able to kind of hold its gains for most of the day, whereas a lot of the other indexes spent quite a bit of time in the negative territory. So this one is also looking pretty strong. And when the Russell 2000, when the small caps are doing well, that usually kind of portends that, hey, there's a little bit more of a risk-on approach. We certainly saw a lot of the China names and things like that really rally from these lows. So it it remains a question of, is this going to be kind of driven by the bottom fishing, by a lot of rebounds and things, or is there going to be some growth that eventually comes to take the reins at the forefront?
Some interesting commentary there. And let's also take a look at the 10-year Treasury yield, up a little bit today, got slammed pretty hard on Friday. So what do you make of what we're seeing here, Justin?
Well, again, I think right now a lot of people are looking at the fact that the Fed tightening might not be as aggressive as originally believed, and so that's really kind of putting pressure on the 10-year Treasury yield. It really kind of skyrocketed for a while, but now it seems like the 3% level is an area where it's not wanting to get above that too much. So again, this remains to be seen, especially. We've got the Fed meeting coming on Wednesday. They'll make the announcement. Expect a little bit of volatility out of that after that announcement. That's going to happen at 11 a.m. Pacific time, 2 p.m. Eastern time. But then again, expect some more volatility going through into the press conference when Fed Chair Powell speaks. A lot of times, a single comment can throw the market one way or the other, and there's often, your reaction, your counter reaction, and
then the
so
ultimate
on.
reaction. So
the ultimate reaction.
Yeah,
and sometimes you don't find that.
Just pull up an intraday chart and grab your popcorn. It's pretty
exactly.
fun.
So and that kind of speaks to the fact that this has been a little bit more volatile. As I mentioned, the sector rotation is happening a little bit quicker. So whereas you might be looking at the fact that, oh well, if the market takes off here and I'm not invested, I'm going to miss out. But on the other hand, it could also save you from not being too heavily invested if things go the other way. So right now, it's just hard to get a sense of trend. And without that, it's hard to make a big bet either way.
And just to further underscore, it's a huge week for earnings. We've got the economic data that you mentioned, the Fed that we've been talking about, and it's all really starting tomorrow.
Just a few things that are coming up. We've got the Consumer Confidence Index coming out, new home sales report, Case-Shiller Home Price Index tomorrow. GM is reporting before the open, UPS, Microsoft, Google, earnings after the close. Then Wednesday, we've got the Fed meeting. We've got Ford, Meta, Qualcomm on Wednesday. Then Thursday, we've got Intel, Amazon, Apple. We also have Q2 GDP, weekly unemployment numbers, the Fed balance sheet. And then Friday, we've got Chevron and Exxon Mobil after the close, and then the personal consumption expenditures. And that's just a taste of all of the data that's and earnings that are going on. There's plenty more.
Yeah. All right. And we are going to be analyzing what individual investors need to take away from all of that throughout the week. So we're on top of it. So this is the place to be to get all the latest news and information and the perspective that could help you make those smart decisions as an individual investor. And let's move on and talk about some stocks of interest today, like McKesson. It did back off a little bit by the close, still up 1.7% by the end of the day, some slightly above average volume. But this is a stock that got pretty tight, tried to clear an early entry. It didn't really get off the ground. It's trying to do that now, but maybe some resistance around that 340 area.
It could be, but if you see it go through that area, then it's going to give you a little bit more confidence. And it was nice at the volume, although it wasn't really above average. It was right just slightly above average. It was really
picked up.
very high compared to what we've seen in the last few weeks. So again, this is one where breakouts have been a little bit tougher to play, especially if it's something that's run up a lot. You would almost expect it to take a break, and I feel like it really did at that 335.57 level. It kind of tightened up. You can see that some really tight closes there, and that's exactly the kind of action you want to see. So just because it doesn't break out on its first try doesn't mean it's done. Certainly, it's in the right area. The medical group has been one area that has been really kind of shining as of late. Again, it's a little bit topsy-turvy right now, a little bit a few steps forward, then a couple steps back. But overall, this has been an area that has been looking stronger. And McKesson, while normally it doesn't necessarily make the biggest of moves, in a more defensive market, it can. And you certainly saw that that has been a big winner in the last few months.
Absolutely. And so then one more thing to note here before we move on is that we have earnings in just a little over a week. So if investors did want to initiate a position around these levels, you'd want to be thinking about, okay, can I get enough of a profit cushion to be able to hold this through that report?
Absolutely. And one other thing, just to mention, they did up their dividend today. They announced that they were moving that dividend from 47 cents to 54 cents, so about a 15% increase in their dividend.
All right. Good to note. Thank you for that. And all right, can WWE stock deliver a knockout punch here for investors? Well, a gap up on news today for the stock sent shares above the 70 level. Very strong volume behind the move. And we've got an RS line blue dot for a base. That is a pretty big one here, Justin.
Yeah, it has been, but that relative strength has been something that's been catching our eye for quite a while. Now, we did have all the scandals going on with the former CEO, Vince McMahon. He got tossed out of the ring, resigned, and now we got his daughter, Stephanie McMahon, and what was his name? Nick Khan. Okay, they're going to be co-CEOs. Nick Khan especially has been one he's been the president of WWE for a while, and he's been kind of floating the idea out of a sale. Certainly right now, WWE has been really benefiting from some of these streaming licensing partnerships, really kind of targeting an international market. And you got to wonder if they partner up with one of the big media conglomerates, maybe a Disney or something like that. What could that do for them? So that's something I think that a lot of people are thinking in the back of their minds. So whereas the news out today was the co-CEOs were announced. They also announced revenue. A revenue outlook that was above expectations. So 328 million versus about 312 million for the last quarter. So, that helped certainly, but I wonder if it's just a little bit of this buyout rumor. And you have to be very careful with rumors and things like that are out there, but not necessarily going to happen. Or even if they do happen, let's just look at Twitter. There could be a buy price, and then the deal falls through or is in question. So be careful of the rumors, but good thing to do is watch the chart action.
Yeah, that's such an interesting point because even Netflix now they're going to come out with an ad-supported model. So if this if it is courting itself to potential buyers, one could imagine that it might get quite competitive out there. So we'll have to see.
Well, there's a lot of people looking for content, and WWE, I mean, it appeals to a lot of people. So that's one of the things where when you're looking to get an audience, it's nice to have a brand that's already established.
So true. Okay, and last but not least, let's take a look at Exxon Mobil because we did see a lot of oil and gas stocks on the move today, Justin. Exxon up over 3%. Volume was light, though. It has earnings coming up towards the end of the week here. But is this group coming back to life now?
That's the question. We've been talking about USO, which is a ETF that kind of tracks the price of oil. This is the U.S. oil fund. So this has been showing a reversal, kind of didn't get quite to its 200-day moving average line, but really bounced off that. If you look at Chevron, ticker symbol CVX, that also looks like it came down to its 40-week line, got support there, and has bounced. And then if you just look at the broader XLE, which is the energy sector spider fund, that looks very much like Chevron. Chevron and Exxon, it should be noted that those both have like about
Yeah.
a 20% weight. And so between the two of them, it's 40% of XLE. But it's not like it's regulated to just these few that we just mentioned. You've got Marathon Oil, MRO. You've got Devon. You brought that up this morning. There's a lot of stocks in this area that have a similar look. Like it looks like support may have gotten hit at the 40-week line, and you just wonder, hey, is this potentially something that could have another run?
Yeah, I think the big question for me, though, is so many of these stocks that week of in mid-June, just the huge declines, many of them broke their 10-week moving averages. And, I mean, it's been a number of weeks now. So it's been, 5 full weeks since that. Is that enough time for these stocks to now be presenting maybe more aggressive or early buy points? Or when you see that kind of damage on the left-hand side of a base, does it take a little bit more time to digest that and form another proper setup?
Yeah, you have to definitely take that into consideration. The worse the break is, the more time you usually need to heal. But if you think about it, as much as that break was not fun, if you were holding on to oil stocks, it really did kind of end up just being 1 week. Then you saw some kind of tight action here in Exxon Mobil for a few weeks, and then a reversal off the lows. So this is actually not looking too bad. It really held up pretty well, considering. Okay, now you mentioned 5 weeks. Well, how long do we need a base to be? 7 weeks for a cup with handle, right? So you can easily imagine in a couple weeks, this making a little bit more progress on the right-hand side. Maybe it takes a break, makes a handle for a couple weeks, and then voila, you've got your cup with handle. So you can definitely see this playing out in a pretty orderly way. Now the question will be, do you get some volume? There was a lot of volume on that break, so I think that you're right in questioning it and asking the question. So now the question is, can we get something to kind of counterbalance that? And if volume doesn't come in, then I think I'm going to be a lot more suspicious. And if you do see some volume coming in, then that might tell you something. So until volume comes in and until you can make a little bit more progress above those previous areas of resistance, for Exxon Mobil, the 10-week moving average line, hey, I'd like to see it get above that as a start. But then let's see if it finishes out a base and turns into something.
Yeah, we'll have to see. That makes sense, Justin. Thank you so much. So again, it's a big week this week. So some final parting advice to our audience, how to handle the week.
Well, again, if it were a better market trending one way or the other, I think it would be a little bit easier to play. But right now, I feel like it's hard to make a strong bet either way. So you can have some exposure, maybe some pilot positions and things. But I just feel like it's not something where you want to be very heavy at this point. You need to kind of wait for some of these news items to get out of the way, some of this earnings to get out of the way. Once we have this week done, you got a lot of the big tech that will be over with. So I think it's going to be a little bit of a better chance to not get tossed to and fro by headlines. But you still need those stocks to show you strength.
Yes.
And so far, it's been very hit or miss on the individual stock level.
All right. Well, thank you, Justin. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. As you can see, I'm in our LA office this week.
Yeah, that's a new background for you, Allie.
Yeah, it's a new virtual background. It's a video background of people moving and blinking and breathing behind me. But anyway, happy to be here. I'm going to be hosting IBD Live in the morning. David Ryan, our weekly special guest, will be joining us. So make sure you tune in, investors.com/IBD Live for all the details. We'll see you there, everyone, and we'll see you right back here tomorrow after the close.